So this is a question from Matt via email about the ideal investing frequency. And I think this question is coming up more and more because people are investing in ETFs, exchange traded funds, and they're trying to work out how often should I actually be investing? And so the question is that, is there any benefits trying to work out your investing frequency? Should I be buying shares and ETFs fortnightly or monthly? Like how often, and how do you work that out?
Yeah, I mean, we often talk about just invest. I'd say that for most people, that's the best advice, is just invest. But the problem is every time you invest a certain amount of money, you lose a bit through brokerage.
Yeah.
So some of the brokers now have driven down the prices to like zero or near zero. Basically, you're not going to be a competitive brokerage firm in Australia unless you're below $10 for a small trade. And even then, there are some, that will do it for free. But as we've spoken about in our brokers series, there are normally strings attached if the brokerage is free. So what does this mean in practice? It just means that every time you make an investment, so let's say you invest $500 or $1,000, you actually end up losing a tiny amount from the brokerage. If it's, the brokerage is $10 and you've got $1,000 to invest, you lose, you're left with $990 that actually gets invested. Now, $10 on $1,000 isn't that much. It might not seem like it, but if you're doing that every month or every week or every fortnight for 40 years, all of a sudden it's a lot of money. So this calculator, Kate, I'll let you do the intro to it. I was just reading through some of the assumptions. It's quite interesting.
Yeah. So I was chatting to a few people who think about this a little bit more than me, and they said there's a fantastic calculator which really works for anybody called an investment frequency calculator. And the website is investcalc.github.io, but I'll put it in the show notes. And what you do is you add in your income frequency, the amount you're getting to invest, how much interest you get on the savings, which in Australia right now is virtually zero, your expected investment returns, and your brokerage per investment you make. And it puts together using some code, I'm sure, in the back end, an optimal investment schedule telling you how often, based off your brokerage amount, makes sense for you to be investing. And so it does help, especially if you're investing in ETFs and you've already you've decided, hey, these are my 3 ETFs I'm going to invest in. I just want to know how often I should be doing it. Should I be waiting until I have $1,000 or $2,000 in my bank account? You can use a calculator like this. And after I went down that rabbit hole, there's quite a few calculators that work on very similar assumptions around the web to work out how often you should be investing into your ETFs. That makes sense when you're looking at the cost of your brokerage.
Yeah, I think this example is going to hit home for people here. So in the past, just for a bit of clarity, in the past, I would always say invest at least $1,000 at a time. That's because brokerage, when I was saying that, was $10 to $20. I still, like, if you're investing less than that and you're paying $10 brokerage, starts that up. Like $10 on a $500 investment in shares is 2%. So that's quite a high amount. Like we always talk about how investment fees can be high if they're like 2%, 1% per year. We're saying this just for one investment. So it's important. It's important to consider, but maybe an example here will help, Kate. All right, Kate. So here we can see Pearl's website, and there is an investment frequency calculator. So here we can see that if we get paid monthly, each pay we save about $1,000. The bank account where we put our money, or like in the brokerage account if it pays interest, wherever we put that savings amount until we've got enough to invest, is 0.1%, which is like not many brokerage accounts or bank accounts off that much in interest. And let's say the investments earn 8% per year, and it costs $10 to make an investment. According to the calculator, with $1,000 added every month, we should be investing every 2 months.
Yeah.
So that would mean that we're investing $2,000 at a time. Now, so what's the difference between, the best strategy, as in every 2 months, investing every 2 months, with $2,000 rather than $1,000? So if you leave money in your savings account, the calculator suggests that you might have $120,000 after 10 years. But if you invest it at the optimal frequency, you'll have $178,000 after 10 years. And if you invested at half the optimal frequency, you'll have a very similar amount too. But But obviously the optimal frequency is every 2 months, which is about $2,000. Now, if you're saving $2,000 a month, well, then what's the optimal frequency every month? So this is based on obviously a $10 brokerage. So the basic, I guess, idea here is that it's like for most people, if you can invest $2,000, do it. If it's not $2,000 that you can invest, maybe you can do it with $1,000. But let's say, for example, if your broker was charging you $3 and you only had $1,000 to invest every month, then all of a sudden it's still saying invest $1,000 every month. So we'll put a link in the show notes to this. But the basics is it's like a relationship between how much you pay in brokerage and how much money you have to invest. If your broker's charging you $10, maybe it's worth investing $2,000 parcels. But if your broker's charging you $3, maybe you can invest $1,000 parcels. It's just a very simple relationship. There are flaws to this, we should add. It's not just like, personally, I think, personally, I think this is it's a very complicated thing to think about. After a while, you'll begin to just be like, okay, you'll have it on autopilot and you'll just go from there.
Yeah, and I think this one is a little bit more useful if you are investing in a couple of different ETFs. You've decided your 3 ETF portfolio, because it doesn't make sense if you only have $1,000 each month to sometimes buy 330 in each of these 3 ETFs. And so it might make more sense each month to month 1, you buy $1,000 of ETF number 1, month 2, $1,000 of ETF number 2, and so on. And then you just keep rotating through that. So you keep topping up into each of your ETFs in your portfolio, or you might not exactly have a third in each one. So just depending on what that allocation is. And then some people choose to top up the ETF that has the lowest amount in it. So it really comes back to working out your allocation. I think we've talked in the past about putting that investment plan together. So if you know what you want in each ETF, it might be 60, 20, 20, then just topping up the ETF that's furthest away from that allocation. But again, I think this is a little bit more technical, that people don't start off at this point, but it is, if you're going down the track and you're trying to figure out a long-term strategy to add to building this ETF portfolio, it sometimes can help having a look at these numbers.
Yeah, for sure. You may as well use the calculator and put your situation in and see what works for you. What I would say is if you've got $1,000 and you're worried, should I make my first investment or should I wait till 2,000? Just invest. Yeah. That would be for absolute beginners, just invest. Get started, put the money to work, see how your emotions go. You might get it wrong, you might get it right. But just remember that you've got to start. The hardest bit is probably just that first investment that you've got to make. Obviously, and another thing, I think this is something you and I have grown on, Kate, and we've got a question in a minute about having invested for quite a while. But we often talk a lot about fees and keeping fees super low. Obviously, that's really important. However, once you get to a certain level, it's actually okay. And I think there's nothing wrong with charging fees, to be honest. I think in the beginning, I was very fee conscious because I had a smaller balance. But once your balance is 10,000, 20,000, 50, 100,000, the fee that you pay, it's you kind of, I don't know. Is it my talking out of turn here? Have you felt this? I'm not really that worried about it anymore.
Yeah, I think it's interesting as you do at the start, that first $1,000 is so critical to you, and the decision you make with that $1,000 feels enormous. But I think as you invest and get comfortable and start building your portfolio over a number of years, the $1,000 decisions start to feel a little bit smaller when you're dealing with the $10,000 or $100,000 decisions. So I think that's I do see some of our community sometimes get stuck on deciding between the $5 brokerage versus the $10 brokerage, and they'll spend months agonizing and not actually taking that first step, which I think is the most important thing, to take that first step and to become an investor. And you can change brokerage accounts down the track. It's not a be or an end all. Most of these things you can change. It's more, you've just got to get started. And I think,
agreed.
I do think fees, if you're actually getting the service you want, are okay, but they do compound over a long period of time. But when you're talking about brokerage, when it's just a once off when you make that purchase, it's not an ongoing fee necessarily.